Hi traders, Crispin here from FX AlgoTrader, 13th of November 2019, and this is part 5 of our support and resistance video series. So in the last episode, we looked at how to draw a trend line through swing points, and you can see here we've got these various different trend lines on a GBP USD H1 chart. So that's a cable chart. Sterling US dollar is often referred to as a cable chart. So I was talking about time frames, and these trend lines all look fine on an hourly chart, but if you actually look at a daily chart, those are those trend lines there. You can see in the context of a daily chart they don't make a lot of sense really. If you are going to trade on an hourly basis, you've got to do what they call top-down analysis. So let's go to, I go onto a higher time frame like weekly, and I draw in some real long-term trend lines through these swing highs here. And again, we're going to have another one that's probably not valid. So I was going to draw one from this swing point through to that swing point, but you can see that trend line was broken there. But that also may come into its own again, because what tends to happen is that previous levels of resistance, which were then broken previously, become support again. So you often find price action will break through a trend line and then come back down and retest that previous resistance level, which then becomes support. And that happens all the time in FX trading. So I may leave that there. To all intents and purposes, though, we're looking at what appears to be a fairly long-term downtrend on cable, and we've seen that going on for years, really. Obviously, after the massive run-up to the almost $2 to the pound back in a few years ago, and then obviously post-Brexit, we've seen a pretty major deterioration in sterling. So arguably this pair is in a pretty major downtrend. So we need to bear those things in mind when we're looking to trade on lower time frames. And again, let's just delete these short-term hourly trend lines here, and we're going to go and draw some more trend lines on the daily chart through these swing high points here. And again, let's just get rid of that trend line in there, and we'll draw a trend line through these swing lows. So we can see we've got essentially a descending channel on the daily basis, going down to 4 hourly. I'm not seeing a great deal more granularity there. I think you could probably just tidy these trend lines up a bit and just lock those on a little bit more accurately. Actually, I'm going to have trouble doing that because our point is a bit too far away. There we go. So that allows me to just tidy the precision of these trend lines up a little bit. So if you were looking to trade on an hourly basis here, you can now see when we do our top-down analysis, we're trading in a descending channel. So really your bias should be to be short, as in you want to be selling sterling US dollar in line with the overarching trend. If you didn't do your top-down analysis and you didn't look at where price action was in the past and where these swing points were in the past, and start to define those long-term trend lines, you could very easily make a mistake of thinking, oh yeah, we're in an uptrend, because look at this hourly chart. It all looks very rosy if you ignore all the trend lines, the long-term trend lines. You could just say, yeah, great, this is all looking a little bit bullish, but is it really? Not really. It's essentially a bearish market in a descending channel on the longer term time frames anyway. You've seen this run up here from this low, and you could argue, yeah, you could draw a trend line through that swing point, those two swing points, and you could say this trend line may act as an area of support. But for that to happen, you need to see price action break out of this descending channel we've drawn here and then come back down. In the next video, I'll talk about price-derived support and resistance, but hopefully that's going to be useful for you in terms of how to factor in the longer term charts, the longer term trend lines, into your trading, so that you factor those in when you're starting to apply trend lines on the time frames you're looking to trade off. So on an hourly basis, you'd be looking, in my opinion, to be going short off a retest of this trend line. So if you see price rally up, you may see it may get to that around, probably won't go a lot higher than that in fairness, 128, 128.50, something like that. That's where I'd be looking for confirmation to go short. And again, there's a bit more to it than just this trend line, because I'm looking back over these price derived resistance and support levels, and certainly there, that support level there, that may well become resistance again. And you've kind of seen a little bit, that large bearish candle there came off that previous support level. So I'm kind of dialing into that a little bit, and I'm looking for confluence of events, like a confluence of this downtrend and previous price derived support and resistance. But I'll cover that in the next video. Thanks for watching.